Good morning, all, and welcome to this live intraday strategy webinar on SB Trade Desk. Today is Wednesday, August 23rd. Mike Boutros with you here this morning. Alan, Jatu, Mark, Pete, Rushton. Great to see the whole crowd. So I want to leave as much room for your questions as possible. We're still kind of in this summer doldrum type of boring type of price action, but there are still some big movers. Biggest movers overnight was Kiwi. We looked at that. We actually highlighted that in yesterday's update. So a nice breakdown there. We didn't get the rebound we were looking for first, but that is continuing to follow as progressed. We'll take a look at the euro dollar. Obviously, swing trades just got triggered in on a short. I like it, so I'm going to continue to favor a hold near-term resistance here in the euro. We'll look at that. And the DXY, obviously, to start things off. We'll take another shuffle and look at Ethereum real quick, which rallied yesterday. Pound yen and pound dollar, both which are breaking down. And then we'll quick update on Aussie yen, which we highlighted earlier in the week. Hey, Russian, great to see you in the room, sir. Also, gold. Oh, I forgot to add that to the mix. So if there is anything you didn't hear mentioned that you want to review, as always, you know what, D, we'll take a look at dollar yen too for you there. Kind of give you an update. I know you're still holding a position on that. And for those of you who may be struggling or looking for some new setups and kind of still a little timid, it's completely okay. All right, it's the last full week of August. These are, notoriously the slowest and most lightest volume, thinnest markets of the year. And certainly you're heading into a major event risk. So what that means is with these thin liquidity conditions, you could see some pretty outsizable moves if there is any material substance that comes out of Yellen or Mario Draghi, which both are slated to speak at Jackson Hole right into the close of the week. All right. Did Aussie dollar and Euro Aussie, Pound Aussie get a mention? Well, they did now. Let me write that down. Aussie dollar. You want to take a look at Euro Aussie and Pound Aussie. Typically I love Aussie pairs. Out of all of the years, a decade plus of trading, Aussie has been my most traded currency, but as of late, I've been a little thrown off, so we'll definitely check those out. It says 3 of my faves. No problem. We'll take a look. First things first, really nothing to update here on the dollar index, guys. It's really going to be determined, I think, for us on a broader scale on where we close on the weekly charts. So if we're able to close above, again, that same median line, I'd still be inclined to think you get a rebound towards that median line of the descending formation. And that takes you, remember, as high as 94 this week, as high as 94.50, which is kind of why I'm still looking for the bounce. At the end of the day, if we clear these closed lows here near 93.20 or sub that, you're still looking for a drop into that 91 area, 91.90. It's the exact low that we made also in 2016. So this is what we are looking to determine on a weekly close basis. Okay, the daily chart, again, nice little rebound off support was encouraging yesterday, but here's a little bit of a pullback. If you look at the intraday chart, it's not that encouraging either. So we adjusted the slope yesterday. I'll bring this to a 120. Okay, here's what we looked like yesterday. So I was willing to forgive this as sort of a false break scenario of the basic trend here. Resistance looked pretty good. The June low day close, kind of like a magnet. We keep just getting pulled right back into it. And it looked, on whole, is just a basic, really clean weekly opening range has taken shape. Now that hasn't changed per se. Here's your weekly open. Here's your weekly opening range highs. Last night, I was kind of banking on this thing to break through the weekly opening range highs. We haven't. We've pulled back. And now, we're sort of disrespecting, rather, for lack of better words, this trend line. So I'm not going to continue to really follow these slopes if the market's not giving us, the reaction that we're expecting. I'll leave it on there for now just to see if we kind of react and maybe we close this 120-minute candle still above. But largely speaking, you have a pretty clean weekly opening range right above the 2016 low day close. So at the end of the day, we just need to see a break of this near-term range to give us some guidance on our medium-term bias. A break to the downside, look for a resumption. 92.62, just a soft target, and then again that 91.92, that low that we made in 2015, or 2016 rather, was it? If we see a topside break, well, 94, and then that 94.50 level, which corresponds very nicely with some targets here on the daily chart and confluence resistance here on the weekly chart. So the levels are super clean. We just need some, momentum to come into this market. We'll get it. We'll get it. Any questions on the dollar index? Okay. Don't want to beat a dead horse, so let's move right on. Kiwi dollar again from last night, or actually, I'm sorry. Let's do Kiwi dollar first, which was second up from last night. Biggest mover on this session. I kind of just had a feeling this thing wanted to break down. The price action that you saw off the highs here this week, and then where it paused and just sat, you didn't even get any type of really material rebound. And the nature of price action in and of itself was pretty bearish. So here's the open of the week. Basic trendline resistance would have taken it, a little bit higher, and that's what we were looking for. But it didn't even make it past Friday's highs, and then he broke below the weekly open yesterday. Into when I published this, we said, look, if it rallies back near 73.09, the weekly open, that might be a beautiful entry to get for a downside break here into 72, 71.87, 71.70, all real critical regions of support. Major swing lows, a 50% fib, and another major swing here for 71.70. So here's what the 120-minute chart looked like. Again, saw some divergence here. The 60-minute chart had real strong divergence. So while I wasn't really looking to get long, I was looking for a short entry a little bit higher. You didn't even get it. You didn't even get the bounce. It just broke right down. So again, our directional trend was right, but having the setup, right? There was no way we can effectively get short here on the breakdown with any type of viable stop. So unfortunately, that one kind of ran loose without at least my entry on it. Initial target right here, turning just ahead of it, 72.06. Again, just some former swing lows. 71.87, again, that 50% retracement. 71.70, also a former set of swing pivot lows. And that whole region, my friends, look to the left, or look to the right rather, okay, is defined by what? On the broader trend, you have the median line. There's that 50% retracement. And just lower, where that 68.69 target is, just below that is the 100-day moving average, which has been a very nice pivot in price, right? Support, support, resistance, pivot break, support. That's right there. So the levels are super clean. If you're not in it right now, don't go chasing the short side from here. Areas of interest for re-entry, if you're trying to get back on the short side here, I'd have to say not really much parallels to work with. I mean, obviously now you're going to bring down your resistance here to 72.75, and we're going to bring down our bearish invalidation to the weekly open. If this thing recovers through the weekly open, I do not want any part of it. But as it stands right now, this is kind of your initial resistance. Now it's a ways away from where we are right now. You need to rally like 50 pips to get up there. I don't think you'll get that high, to be quite honest with you. Maybe something like that. 72.50 would be a nice area. 72.55, possible look for some near-term exhaustion in price. At the end of the day, your downside targets are well defined. 72, 71.87, and again 71.70 starts to run into that major key 100-day moving average. Questions on Kiwi dollar? Again, from a trading standpoint, initially right now, if you put a gun to my head, I would think that this thing probably slips into this support early into this session, and then we see some sort of really a little bit more of a meaningful recovery, let's call it, and then we'll start to look to fade that a little bit higher up. Ideally now, kind of near towards 73 again. Yeah, looking left, 72.45 looks like support resistance level. 72.45. Yeah, you could see some pivots there. Sure. Sure. Kind of try to look to see daily or weekly lows, something that's been a little bit more concrete. Because if this low was, you would have seen some sort of interruption here, right? You didn't. But these two lows, and this is just to show you what I'm looking at. These two lows here, when we broke through it, there was acceleration. When we came to test it, initially it was resistance. Then we popped back from it. Then we broke through, and again we saw acceleration. So that's kind of what I look for when I look to place a pivot or show you or tell you guys a target. If it's not a fib or if it's not a confluence region, that's usually what I'm looking for in price. Is have we want to see low tolerance price action, meaning price doesn't want to sit there very long. It either rebounds and reverses real quick, and when it breaks, we want that shoot through. Make sense? Let's look at the 4-hour. It says, okay, I got you. Yeah, if you're looking back here, I see what you're talking about. Sure. You could see some pivots around that region. Yep. But when it starts to lose efficacy is when I start to stop paying attention to it. So for example, if we had noticed this back here, right? On the way up here, it saw acceleration on that break. So we were like, oh, okay, cool. Maybe that is a good region. But after that, it's been a whole lot of chop. It's been a whole lot of chop. So in the current price action, it doesn't seem like it's a level that's really responding. Now, again, a lot of trades are like that. And I think it's just a nature of the conditions that we're trading within. It will change. It doesn't last forever. And typically when it does change, it changes pretty quick. So we want to be ready. Okay, any other questions on Kiwi? All right. That was number 2. Number 3, quick update on Euro, which we also talked about last night. Here's what the Euro chart looked like. And basically, we're testing resistance right now. This is our near-term bearish invalidation level. Again, a breach of the weekly opening range high objectively would shift the focus, in my humble opinion, back to the upside. So that's why we're short. Jamie's swing trade is short against that high as well. I'm currently holding a short just from before this webinar. So we're going to see if this thing can turn from here. If not, your stop's pretty tight. And if it breaks through, you know that you're invalidated. All right. That means that we've broken back above this slope right here. And that would shift the focus back to the 2010 lows at 1876. We kind of petered there earlier in the month. And then the next top side target is not till 1998. All right, so not our favored scenario, but certainly that is the possibility if we break higher from here, which is why I think myself and both of us are looking, and Jamie are looking for a little bit of a hold here in euro dollar. Here's what the daily chart looks like, just to remind you guys. Came off a big region. That's weird. Sorry, guys. My charts are misbehaving here. The 2010 swing low, okay, converged with the upper median line parallel. That's the region we were looking for as major resistance. Took a couple of days and took a couple of spikes higher, but we did reverse off it. Now, this is the pivot line that I've been working with for the last couple of days, and this is why, if you guys haven't sensed my frustration over the last couple of webinars, this is like a perfect example why. Like, what the hell is that? Is that a breakthrough? Is that a recovery? And then we closed above. Even if you bring it into a line chart, it's messy. Okay, it's messy. And this, again, a function of the conditions that we're trading in. But that being said, near-term chart looks like we still have some clarity here. I will, again, forgive that as sort of a false break scenario above the trend line. Remember, this was our bearish invalidation level to start the week. But after that reversal that we saw, and if you adjust this slope actually gives you more touches on the support. I'm willing to give this another shot and see if we can hold below that 118 handle. 118.30 being the highs for the week. Questions on euro. Here's the 120. Here's the 60. And if you get even more granular, here's the 30. Okay, and you're seeing that momentum is kind of butting up against that 70 region, unable to make it through. The last rally that we made through, we shot right through, right? Indicative of continuation of uptrends. This is the first time that we made a break below into oversold territory. Now on the recovery, you're starting to find resistance at 70. All things that are encouraging. I would leave room for a possible spike again at 118.20, 118.90, but if we get, or 118.20, 118.18, but if we get through the highs, 118.29, 118.30, I think you're at risk for seeing this thing really start to rip. Okay, that is euro dollar. Number 3. Quick touch on Ethereum, which is another trade that we've been following. Looking for the pullback, we were talking about this, was looking for this pullback to come into the median line here. We didn't quite make it that low. Now, if you take a parallel and extend it off the low from here, again, that almost touched, so maybe that was it. Long story short, my humble opinion, as long as you're below the actual concerted median line, this could just be a pull into resistance, and again, we'll actually go for a touch, if not a lower move, before we recover. If Bitcoin is any indication, this thing turned right ahead of support as well. So if this thing makes it through its highs, that might be just the fuel that you need to get all the crypto block moving. But that said, I still think you're at risk for a little bit more of a pullback here before continuing higher. Levels remain unchanged. So the next topside target when we breach would be up here. Bullish invalidation for the broader trend still here. Interim support looking at that median line. Basically comes in with the weekly low. Any questions on Ethereum? Going once, going twice. Okay. Here goes the sterling crosses. I want to do pound yen first, and then we'll do pound dollar. Also pretty decent movers. Continuing the breakdown from earlier in the month. Here's what pound yen looks like. First on the daily chart, and then we'll bring up a quick reminder of what we were looking at here on the intraday chart. So here's the daily chart looked like earlier on the Sunday open, I think this was, right? On the 21st. And we were kind of just opening, talking about the fact that we were looking for this, remember last week, for a rebound off this critical confluence with the 618, 142.15. We were horribly wrong. This thing broke below, faked us on the upswing again, and then moved lower. That's the way it is. We were at this slope support yesterday, so I thought we could get a little bit of a bounce and then it played to the downside, and that's exactly what we got. We got a little bit of a rebound and a break lower. I still think you look broadly lower near term. Ultimately, it might be a nice opportunity to sort of fade some of this weakness. But as it stands right now, I'm a little concerned. Here's what it looks like on the intraday chart. And again, here's what the intraday chart looked like earlier in the week. So this was the weekly opening range, kind of right below this 618. Spiked high. Like I said, we were looking for that entry near the median line. Again, everything in this market just fades right ahead of resistance or turns right ahead of support. It's just because there's no momentum behind it. And that's, something we got to get wrapped around our heads until these conditions change. So another thing that we were talking about earlier is keeping all your limits and stops on the inside. If your target is up here at the median line in this market condition, put that pad in between you and that target. Don't miss it just because we're looking for the stretch right into the pip of resistance. But in any event, the only thing that's encouraging here, or the thing that's initially encouraging here, is obviously we talked about support at 139.84. It looks like we're breaking that now. I want to see follow through in the U.S. market. But if it does do that, it would also be sort of a break of the objective weekly opening range, right? Here's your Monday, Tuesday stretch lows. So target down at 138.54. That's not changed. At this point, you'd want to bring down your near-term bearish invalidation level to the median line. Okay. And you're basically looking for that stretch into confluent support here. Now, this is defined by the swing lows that you made here, both for the month of June and the 786 retracement of the broader ascent off that low from April. That's the April-May advance. Okay, so a nice little cushion area there. Again, we're not just chasing fibs, right? At the end of the day, look to the left. So a good drill that you were actually talking about, Rushton, right? If we look to the left here, yeah, there's been some times where it's not really been responding, but here's support, here's support. It's within the confines of a gap, which is even awesomer, for lack of a better word. But even though we didn't respect it very much here, the fact that we came back and we responded to it again here, I'll keep paying attention. Okay, any questions on pound yen? Okay, feel free to take a snapshot of this chart if you'd like it for your future reference. The median line formation has been kind of decent. I don't want to say I'm too thrilled with it. This was a breakthrough that wasn't really welcomed. This was actually a swing low. So that was just a soft target and actually caught the concerted low on Friday, which was awesome. So if this break is legit here, we'd want to see price start to accelerate into the U.S. Open. And again, the downside target would still be right there, 138.54, 138.83. All right, questions, comments, concerns, pound yen. Okay, pound dollar looks like this. Pound. Where art thou, pound? Here we are. So we got Ethereum out of the way and pound dollar. Where are you? There we are. So here's what pound looked like early in the week. There hasn't been anything changed. The only thing is, price came into resistance, channel resistance, had a real perfect hold, as you can see right here, and then broke the range lows for the week, and we're slowly grinding lower. So if you're holding pound short exposure, I feel your pain. But it's heading the right direction. It's what we wanted to see. Now, yet in a soft target at 27.75. We're not quite there yet. And then you have a little bit more of a concrete target right here at this convergence of uptrend support. And that's, I think, the level that you want to pay attention to next. Okay, so obviously in time, that's kind of moved, but it's just below, right around 2750s. So 2750, 2775, both areas of interest. This is the swing high that you made back here. What is this, in December? And the lower median line parallel for the uptrend. So I'm not really interested in chasing the pound any lower from here if you're not already short. If you are already short, a nice area, I'd start to look for some possible support. Take a little off the table, bring your stops down. If you're looking for re-entries, I wouldn't really be interested in re-entry on the short side unless we break that support line. If we break that, it's a pretty big deal. Okay, this slope has been defining the highs pretty nicely. So if we were to break below this, okay, again, that's the confluence region here. This, the December high here. If we were to break below this, there's really nothing until like 2630, and that would be a 50% retrace of the entire yearly range. So a little bit lower immediately in pound yen, I'd be looking for, or pound dollar, I'd be looking for support towards that lower median line parallel. Questions, comments, concerns? In fact, you're getting some divergence here as price action continues to make a series of lower lows, the oscillator holding equal lows. Now, all of those lows are in oversold territory, so this is considered a very weak divergent signal, but divergence nonetheless. So remember, divergence says nothing towards time. We can continue to dribble lower, and we can continue to make a divergent signal for the next, day and a half before anything starts to materialize. Also, it's Wednesday, and we've made a break to the downside initially, basically, of the weekly opening range. Although you didn't really get a well-defined range low, this could be the break of the range and check it as resistance. So that means we should be looking for, a late week, Thursday, Friday type of low in price action. Is that going to happen with Jackson Hole, depending on what Yellen says? That really could charge some price action and volatility in the greenback. So that's the caveat. But at least for pound dollar near term, that's sort of the game plan heading into Friday. Look for another stretch lower. Okay. Moving right along. Aussie yen. Aussie yen. Here you are. Aussie yen looks like this. So here's what Aussie yen looked like earlier in the week. Remember, we were talking about this ascending median line formation, the fact that we came into it as support. Resistance held, first of all, really nice. 2 tests. The median line breaks have been very nice as resistance and as support. The break saw acceleration. So the lower parallels caught very nice. We're looking for a resolution of this consolidation. Ultimately, favorably, a topside break more so than a downside break. We're now testing a possible downside break. Here's where we started the week. Okay, you want to stay constructive above this. Resistance at 86.93. Key resistance 87.55. Well, we've been testing resistance at 86.93 twice already, trying to get through that, unable, and now we're testing the range lows for the week. So look, at the end of the day, we're going to listen to price action. Whatever price action says, that's what's going to dictate it. But I'm going to just highlight one thing that's going to kind of keep me from getting excited on trying to call a more aggressive short bias on this, and that's this region here still. Okay, big pivot in price. This was also kind of the objective measured move of this double top type of formation that we kind of broke through. And you saw that there was perfect support there last week. So one other thing that converges just below that region is this trend line in purple. I guess it's easier to go to the daily chart. That's this trend line. Basic trend line support. You see a really nice pivot, saw acceleration with support again, and that comes right in that region too. I know my Kiwi chart, my Aussie yen chart's all messy at this point, but I'm just not buying the fact that this thing is breaking down quite from here yet. I guess is what I'm trying to relay to you guys. Okay, so this is the 618 retracement. And then go ahead and scratch this region. And we'll bring that up to this. Okay, and these line up pretty good. So I don't know. You know what? Let's just take a little bit more of a neutral stance on this for now. You know what I mean? Slope extending off that, pretty decent. Watch for a reaction just at the 86 handle. If we got some sort of bump, wouldn't worry about it. Remember, we dribbled below that median line here too. But again, we have to remain objective. And if that does move lower, specifically below this region, that's also an objective break of the weekly opening range. So I'd have to say we'd invalidate our long buys at that point. Look for 85.47, 85.44, or 45 rather. That would be the next area of support on a break lower here. Any questions? Okay, gold. Quick look at gold, and then I'll jump into your questions, guys. Here's what gold looks like. There we are. So this thing it's been a pretty again for everything. It's been a pretty boring start for the week. The only thing I wanted to highlight is that this thing has made a very well-defined weekly opening range. Look for the break at the end of the day. If we topside break, you'd be looking still for a close above these swing highs that we've made for the year. We haven't been able to make a close above this region still. It's basically 1300, but it's 1295 to be precise. So still a constructive trade, near-term support 1278. You know, and a break below that is what really would be required to suggest you have a bigger correction underhand. So no change to any of the levels in gold. Anyone have any specific questions on this, or could I just move on? And again, those levels were highlighted here for you earlier in the week. Yep, so this is the same exact, it's the same exact formation that we're still in. This is back from the 15th. Okay, into your questions, my friends. Dollar yen, got you, D. Let's take a look at dollar yen. That'll be number 9. So as I told you kind of earlier, I not a big fan of it in general, but not a big fan of where we are in price action. The kind of key level that I'm looking at still remains. What I tell you, D, 108.90 into 108.77. That's the 2017 low day close, as well as a basic 50% retracement of the advance off the lows that we made last year. So you can see how many times we've attempted to close and make a move below that. Look, you're making a pretty strong reversal day today. If you were to make an outside reversal even and fail to close below this region, that, in my humble opinion, would be even more so of an exhaustion. Remember, when these outside reversal trades to the downside happen at support, that's not what is going to be. Let's just say that is oftentimes, sometimes a signal of near-term exhaustion. That said, I really don't have a strong opinion for you. All I know is that that's a kind of a key support. You can see that these slopes here off the lows that we've been working with, which are completely derived just from that basic slope. Support, look where we just turned from this morning. So you could chop this way for another, 2 or 3 days before it finally resolves to the upside. Now you are seeing some divergence, price action very subtle, making a lower low, the oscillator making a higher low. So the hallmark is there. It's just, again, lack of freaking momentum in every single trade over the past week or so. So look at this on the intraday. I was kind of looking at this when you were asking me earlier in the chat box, like, this could be in play. If that is in play, you'd want to see like instant support right now. I don't know if you guys can see the 50 line there. But again, you can't just go chasing trend lines if it doesn't hold. There's no reason to even work with this kind of format with this pitch. And in such a scenario, you still have to stress that 108.78, 108.90 level. Because look, this is sort of this is the channel that we were looking at. D, break saw acceleration. That's good. Support bounce was pretty nice. That's good. Break to the downside, saw acceleration lower. That just means we need to continue to watch this slope. When we came up to the upside of it, we tested it as resistance. Came off. When we broke to the upside, you saw a little more acceleration, and now we're testing that same slope as support. So I don't know. This could still be just an effective slope that we're, pivoting off of. But again, if you're looking for a new exposure, this is not something I would be actually interested in doing anything with. You have to kind of sit on the sidelines. Also keep in mind that this is also sort of a failed attempt at a break above the weekly open. So it's not really a strong trend near term in either direction. You want to trade. You want to keep this as a range trade right now, guys. Quarter of the ATR off the lows, quarter of the ATR off the highs, and you're done. In and out. Boom, boom, boom. Okay, questions on dollar yen before we move off. Okay, let's hit up some of the favorites for D here. Aussie dollar, was it? Yeah, we didn't do Aussie dollar? Oh, we didn't do Aussie dollar. Let me do Aussie dollar. Here's Aussie. Here is Aussie. Oh, this thing. Right. So, real quick, I'm going to just start to run through these. Here's what the daily chart looks like. You guys have seen this. No change. There's a really nice rebound off of that support and a welcomed move off of that support last week. The rebound really fizzling out. Unable to make any progress above the median line here, and we're pulling back a little bit, but I'm still not too concerned. Here's sort of, and I think I added this in the webinar with you guys yesterday. I know this looks probably messy as hell at home, but just try to stay with me here. So we were in this descending channel formation. The break saw acceleration. We added this pitchfork, which came in just pips off the high. Move lower. Median line's not really doing much. Here's the lower parallel. Now, one thing is if I delete this altogether, let's just say I delete this, and I just take a basic trendline resistance of the advance, and I copy that to this low, look what happens. Support, support. So I'm not really too concerned yet that this thing is down and out and we're going to go on a straight shot to hell from here. I think even if it dips down to this confluence region, this is the 618 retracement, that's 78.66, that's the lower median line parallel, just above those swing lows from last week. Even if we were to dip into there, I think that might be a good opportunity to get back on the long side. But I want to see support into this region. I want to see support into this region. Does that make sense, guys? Momentum struggling to hold 40, but starting to kind of level off here. Russian says yes, makes sense. Right on. Right on. I still like it. Okay, so that's Aussie yen. Euro Oz is next. Where art thou, Euro Oz? Yeah, I mean, we were another one that we were wrong on here. I was looking for the correction lower in Euro Oz. I still think 149.58 is like, sort of a sell. That's just my humble opinion. I'm not a fan of it. I'm not a fan of it, Jitu. Is this for Rushton? I'm not a fan of Euro Oz at these levels. I think, again, if you put a gun to my head, I would say look for resistance around that 49.50, 49.60 region, and look for some sort of exhaustion trade near term to possibly play a short. It'd be a ballsy move, but that's the only way I'd play this at this point. The long side would have to be a concerted breakout above the monthly high for me to get excited. And then you're looking for a stretch into the 2017 high day close. That's all the way up at 152. But from here, I could see a scenario where it spikes up into this median line. You see this median line here converges almost dead on with this upslope. I could see a scenario where it spikes into there, then it makes an aggressive move lower before countering some sort of bigger offensive here. But near term, watch this region. And even on basic slope, basically looking for a reaction. Excuse me, basically looking for a reaction at one of these two regions. All right, last but not least, pound Oz looks like this. Still has some room to the downside, in my humble opinion, and that works with our sort of assertion of Aussie strength. So I'm not really gonna hate on this one too much. As far as this week's price action is concerned, there's nothing to do but play the range. But when the opening range for the week, guys, carries into Wednesday, carries into Thursday, it doesn't omit its value. In fact, the longer the opening range is tested and as support and resistance, that just means when the break happens, it's all the more, you'll see the move should be all the more stronger, right? It should be all the more apparent when you see it happen. So I still think this thing has one last leg lower into 160.80. It would be a really nice area. I think start look for some stronger support. It would coincide with what seems to be a break of the monthly opening range, which happened right here on the 16th, which would suggest again we should be looking for sort of that late month low. And obviously we're heading into the close of the month next week, so it'd be a good time for this thing to kind of stretch lower. Again, that would entail further Aussie strength, further pound weakness, kind of works out with both of our respective biases on those pairs versus the dollar. Does that make sense too, Rushton? As far as the levels are concerned on the near term, haven't really given this one much attention. Okay, it's way too early for that. You don't know that's a low. Okay, the only thing that's not on the daily chart that I would just want to highlight to you is this region here. You see that confluence on the left part of the screen in the yellow? That's right at the monthly open. So this is the monthly open right here, right around 65, and that's basic slope support that was broken last week, and it's downtrend support. Excuse me, resistance. So if we were to bounce, that's your bearish invalidation level. On a break lower, you're looking for this slope, and this slope right here converges on this region here, just below that 100% extension. So I would still target about 60.80 on this move in pound Aus. Okay, that was number 12. Any other questions? Any other pairs you guys want to review? I know these markets are like staring at paint dry. Trust me, guys. No one feels it more than me, especially someone who wants to trade near term. There's just not much out there with conviction right now. And as opposed to go chasing a trade or forcing something on the market and just, having that FOMO, it's always better to be a little bit more reserved during these times, and kind of have your game plan set so when that volatility returns, we'll be ready to go. Don't force anything here. It's like death by 1,000 needles because the market will just move against you in such a slow fashion that you're just sitting there kind of like, it's like misery. So I tend to be a little bit more reserved. I like the Euro trade. Let's see if that can pick up some more steam. We are short on the swing trades again. And I caught a nice entry just before the webinar here. So we'll see if we can't get some movement on that. Watch the pound on the declines on that side. You do have some pound data, guys. It's GDP for the second quarter, though. This is another revision. No revision is expected, so I don't think you'll get much out of that. As we get into tomorrow, obviously Jackson Hole takes center stage. We'll be getting some of the more of those commentaries. And then Yellen's actually scheduled to speak at Jackson Hole on Friday. So for the event risk on the dollar, that's really what's going to be the bigger shaker, if you will. Till then, things could continue to remain thin, and things can continue to remain range bound. So again, nimble is the name of the game. Be light on your leverage, and things will start to pick up. I promise you. When they do, we got you all covered here on SB, guys. Have a great day. Best of luck trading, and I will see you guys tomorrow morning. Cheers.